So today we have Sari Wild in from Flair Mortgage Group. And, there's so much craziness going on, Sari. Well, first of all, thank you for coming in.
Thanks for having me.
And there is so much craziness going on. I thought, okay, you know what? We had to reach out and see what's going on because we have questions about rates. We see what's going on in the States. We see all kinds of outside influences. And so we're looking for a little wisdom. So thanks for joining us.
Absolutely.
What can you tell me?
I'll fill you in on all the stuff today. So first of all, really exciting news happened last week when the Bank of Canada decided not to increase their overnight rates for the first time in over a year. So after 8 consecutive increases, they're leaving it alone. So that's really nice, especially for any variable rate holders out there. It's really nice because you can sleep at night knowing your rate did not increase, your mortgage payment did not increase this month. So that's really, really good. One of the reasons that the Bank of Canada decided to put a pause to their increases is really because inflation is starting to slow. The housing market is slowing down a little bit more as well. Consumer spending has started to slow, and our economy is actually really strong right now, and our unemployment rates are good. So they decided just to take a break, see what the last 8 increases that we had. They're starting to really take effect here, and we're starting to see the changes come down. So inflation in January was at 5.9%. They have a goal to get it down to 2% still. So we could still see some increases in the upcoming future. But for now, it's kind of holding strong where we are. In terms of fixed rates, though, totally different story. In terms of, like you said, the U.S. market, there's been some major changes happening in the U.S. market over the last few days with the collapse of 2 of their major banking systems. So quite often we do mirror what the U.S. does in terms of rates and how things tie together. So our fixed rates are more closely tied to the bond market as opposed to the Bank of Canada overnight rate. So what that means is if the bond market drops, we'll likely see the fixed rate drop, or if it increases, it increases. So even this year alone, like we already have experienced where the fixed rates dropped at the beginning of the year. Over the last couple of weeks, they started going up again. And now because of the almost 30 basis point drop in the bond market in the US, we're going to see that the fixed rates are starting to decrease. I mean, even today, I've gotten a few emails from lenders just stating that the rates are already starting to drop a little bit. So that's nice to see. So we're more closely tied to the bond market in terms of those. So you can likely see fixed rates start to do that.
Sorry. On that note, if we start talking about the fixed rate, and that's we're sort of shooting towards the 5-year rate, and we're starting to see some downward pressure. What kind of rate guarantees can you get on this? Because if a buyer says, "Okay, I like the idea of getting a rate guarantee now that we see some rates dropping, but I'm not going to move in for 3 months, 4 months," how does a rate guarantee work?
Absolutely. So what we do is we can do rate holds for up to 120 days. So if you were to put in a rate hold today with a broker, you would have it held until roughly July 12th, so mid-July. So that's quite a long time to start looking at properties and find the perfect home for yourself. If you get to the point where you still haven't found a property by the time that July expiration comes on your rate hold, then we would just submit for another rate hold at that time. So it's a really easy process. That's like our biggest recommendation right now is to really, because rates are changing so often, you should be talking to a broker if you're serious about buying or looking at buying in the near future, just because like holding till July is quite a long time. And it gives you that stability to know that you're locked in at that good rate that we're experiencing right now. And like things change, like we said. So we're expecting it to decrease now, but in the upcoming months, like it all ties back to inflation at the end of the day. And like I said, the government still wants to get inflation down to that 2%. So you could still see increases in the coming months. But for right now, we're trying to get those rate holds in while the rates are on the decrease for sure.
No, perfect. Now, what if somebody is scared though and says, hold it, why would I want to rate hold today if we're thinking that the American banking industry could have a little bit more of a collapse and therefore the bond market drops? Why would I want a rate guarantee today?
Great question. So, because we can always look at getting a reduced hold as well. So usually when you submit a rate hold, a lender will allow you a one-time drop as well. So if the rate does go down again, we can honor that as well, just depending on the lender that you go with. But keeping that in mind, we're always shopping around for our clients, and you're not committed to your rate hold either. Like, you're not committed, set in stone, you have to go with this lender. So if we find another rate that's lower somewhere else when it's time to move forward, we're more than happy to accommodate and get you in with somewhere else that might be a better fit for yourself. So
yeah, that's one of the benefits of dealing with a mortgage broker versus a bank, because a bank, number one, the bank has a fiduciary duty to their shareholders. So they have to maximize their dollar, but also they typically only have one set of rates that they post.
Definitely.
You have the ability to, on a regular basis, look, compare, and, see if there's better alternatives out there.
Absolutely. And like, nothing wrong with banks, of course, they provide us a lot of solutions, but they can only offer, like you said, the products that they have. Whereas a broker could shop around for different products. Like, we have access to over 40 lenders that we work with, and we can shop around for the best product for you. And sometimes it's not always rates either. Sometimes it's about prepayment penalties or the ability to move your mortgage at some time. So there's always different solutions that we can look at. We do work with some of our main banks as well. And some of them have the best rates, but sometimes we can get them cheaper for you than what you can get when you walk into the bank as well. So it's always good to just get that second opinion and check with a broker, because it's our job is to work on behalf of the client and to make sure that they're getting the best product for them. Absolutely.
Yeah, our house is generally our biggest check that we're ever going to write.
Absolutely.
A lot of times, if we have to go in for surgery and going to go under the knife, we look for a second opinion.
Yep.
And so I'm continuously telling people, you may want to look for a second opinion when it comes to mortgages as well, because a $500,000, $600,000, $700,000 check is a big check to write.
Absolutely, it is. And we always want to make sure that you're taken care of and that you go into your new home with confidence, knowing that you can afford what you're looking for, knowing that you're going to be able to afford unexpected expenses that might come up. So these are all things that we look at when we do the application to make sure that you're set up for success and that you're gonna get the product at the end of the day that's gonna make you the happiest. So
no, and that's perfect. And now, also for anybody who's watching live, feel free to type in your comments, and we'll be able to ask Sari the question directly right here, real time.
Absolutely, more than happy to help.
And so, Sari, I apologize, I had interrupted you.
No, yeah, we covered it. We covered everything. Like, it does sound more complicated than it really is in terms of like how the rates work and how the structures are that they follow. But at the end of the day, like, it's super simple just to reach out to your broker, and they'll help you and guide you and teach you anything that you need to know as well. Like, we're not just here to make sure that you're covered for the purchase of your home. We can also make recommendations if it's something that you're looking to do in a year out, and what you might need to do to prepare to find that home. So we're here for the long haul and to make sure that people have confidence in their buying decisions.
Perfect. And actually, just before you popped on, I was on the phone with my son, and he's buying a brand new construction. He should be taking possession in October.
Amazing.
So what would you say to somebody who is looking at new construction, but they're well outside of that 120 days?
So with construction, we are able to get longer rate holds in place, so up to 180 days, which is really nice. So it's a lot better, but we can always keep doing rate holds until we're able to actually get them into their property. So that's always nice too. And then builders mortgages and things like that have different sets of rules and policies as well. So again, worth talking to a broker to see what's available to them, just because it is nice to have that peace of mind, and the rules do work a little bit differently when you're building a new property.
No, perfect. And I think we're seeing a little bit of a slowdown in the real estate market for the number of units that get sold. Yeah, and that's exactly it. So we've seen in the past, there have been banks. I remember back, BMO used to have this springtime rate sale that would go on sort of January, February of the year. And the challenge is they were really punitive if you tried to get out. You had phenomenal percentage rate for your mortgage, but then if you ever tried to get out of it, it was a little ugly in the penalties. And so it's really important that you understand what you're getting into. I always say, so long as we know the rules of the game, then we're good. If we understand the rules of the game up front, I'll play any game. But I say, when I play Monopoly, there's always different rules. Sometimes free parking, there's money that goes in there, and you get it if you land on free parking. Sometimes there isn't, and how does that money wind up in the middle? And so it was always different when you played with different people, because the rules changed all the time. And if you didn't understand up front, it felt like, hey, that's not right. So same thing with the mortgage.
Yep, you betcha. That's correct.
Sari, thanks for coming in today. I appreciate your time.
Thank you for having me.
And if there are any questions, Sari, how do they find you?
You can reach out to me on Instagram at Sari Wild Whalen. If you could see my comments, I can put it in the comments. I can't see it. You're going to send out an email, right?
Yeah.
Okay.
So basically what we'll do, go ahead. We're going to come back and in the chats on the Facebook, LinkedIn, or YouTube profile, we'll put in Sari's contacts.
Perfect.
Reach out to her. She loves being on LinkedIn or on Instagram as well. So go ahead and check out her profile. And if you have any questions for either of us or for any other professionals in the market that you'd like to see in having discussions just like this, lawyers, home inspectors, etc., just let us know. We'd love to hear from you. If you like the content, like and subscribe to the channel. We'd be happy to get more of this information out to you, and we will see you next week. Thanks, Sari.
Thank you.